grab a towel, guys. Sorry about that. Had to get the old towel out there. How you doing today? Welcome to the closing beat. Hopefully you're having a good day out there. Woo, we got a lot to cover today. Have you seen the stock market? I don't know if you've seen the stock market, but there's a lot going on out there today. We're going to cover all of it. This is a quick show that we do for our customers. We call it the closing beat, just to go through all the good and the bad for the day. I don't know why the camera's like freaking out there, some weird reason. That's kind of odd. Hopefully that fixes itself. Even the camera doesn't want to come to work today. It's one of those days, huh? Well, we got to fix that. What's going on here? Reach up there and just touch it. Sometimes you just got to smack the thing, you know what I mean? All right, hey, let's get started here. We got a lot to cover on the day. Obviously, the stock market lower on the day. We're playing a game, by the way. It's called Guess the Dow, which is kind of funny because if you tried to guess the Dow, good luck, right? I mean, there was you couldn't predict that huge move. But we do have a winner. Every week we have a winner. Our winner this week with a guess of 28200, which, by the way, there were only 2% of the guesses below this guess. 28200 from my man, Gemmel P. He's one of our customers here. Great saver, man, by the way. I'd love to have him on the show. If you're watching Gemmel, I'd love to have you come by sometime. This man knows how to save some money, and I'm not saying he's well off and he saves a ton of money, but the man is consistent. He knows what's going on there. So, Gemmel, congratulations. You're our winner this week. We'll get you an email out there. Credit your account $100. Of course. Let's go over to the stock market here today and take a look at what's going on since you're basically seeing me all blurry here. That's kind of weird. Here's the S&P 500. We pulled back down to the 50-day moving average. Huge drop there for the S&P. That's going to bug me. Let's see what we can do here. Huh? A little better? All right, so S&P 500 down to the 50-day moving average. Just a really weak day there and very consistent to the downside. We started overnight with some weak GDP numbers that came out of the EU. And so that started with a little bit of a gap down. World market's a little bit weak. But then throughout the day, we just kept selling off. Really, really weak. And if we go into, let's just go down here to 5-minute time period. I'm sorry about the blurriness on the camera today. I'm not sure what's going on. If we go to a 5-minute chart here, you can just see very consistent selling all through the day. That's program selling right there. If you've never heard of that before, program selling is where there's an order to just sell unbelievable amounts of shares of everything from big funds and things like that. But they can't put the order in all at once. You can't sell 10 million shares of something all in one shot. So what they do is they say, okay, sell a little bit, and when the market ticks up, sell a little more. When it ticks up, sell a little bit more. And then it just kind of, or sometimes they call them an iceberg trade, where they just slowly sell throughout the day. This was the least volatile down day, I think, of all of the major down days in the Dow. It was just very, very consistent. So what that tells you is there's not really a lot of panic out there. It's just profit taking, right? Panic would present a volatile back and forth day where people are obviously excited about buying the dip and some people are really scared and they want to sell. Maybe you've got margin calls and things going on, and it creates a wide range day that's just all over the place. You didn't have that today. You had a very, very consistent down day, which lets you know that in the meantime, or at least for now, we're all just taking a little profit. At the end of the day, that's all that happened today. It was very orderly, one of the most orderly down days I've seen with the Dow being down as much. Speaking of the Dow, we go over to that. We sliced right through the 50-day moving average there. Just incredible. Easy slice through the 50-day. And same thing, very orderly and consistent, a little bit weaker because of some of the earnings that came out compared to the other markets. But boy, it was just one of those days that you can't say people were panicking today. It was like, I thought of Tandra. Where you at, Tandra? I thought about you all day just thinking, oh my gosh, how patient they've been to let this market just pull back. It was one of those days. Everybody just said, okay, cool. I'll just let it just pull back a little bit. 2% ain't going to hurt anybody. And so there's the Dow. NASDAQ still the strongest of the group there, holding up highs here. And it's now officially the only index that's positive on the year and on the month. So today's the last day of January, and the S&P actually finished lower on the month and now on the year down 0.2%. Is that good news or bad news, right? Some of you want to pull back. What I want to do is actually just go over real quick and share a chart with you. Remember, we shared this with you at the beginning of January to say, hey, as January goes, so goes the rest of the year. Statistically, that's an argument that people like to make. It's an old trader's tale that people like to follow. So what we did is we went through all of the Januaries here for the SPY, went back as far as we could, and we said, how many times is that actually true? If January was positive, was the rest of the year positive? If January was negative, how often was the rest of the year negative? We went through everything, and in the green green, you could see all of the highlighted areas where that was true. In fact, it was true 61.5% of the time. If you go out further, by the way, it'd be a fun study to do. If we go out and just use the S&P raw data, if we go back to 1950, that number starts to peak over 70%. But if you're using the SPY, 61.5% looking back since 1993. All right. If that stat has a greater probability of being true than false, well, unfortunately, we finished down on a month by 0.2%. So there you go, right? You got, that's going to bug me. You got the probability of the market finishing the year negative now, 61.5%, just using the data that we had there. Hey, so the NASDAQ still positive on the year so far. It's still up 2%, believe it or not. After all of that, the NASDAQ is still positive by 2%. So what we thought we'd do is just go take it a step further and take a look at how February pans out. What does February do compared to, well, just looking back, what's the average February performance? So we put that on a chart for you here as well. So here we go. We're looking back to 1950. You take a look at the S&P 500. Here is the performance of February for every February, looking back since 1950. And you could see, really, if you just look at this graph, it kind of seems like a wash, right? I mean, you see it got a little bit better, a little bit more volatile in here, now more volatile. You got your best month in there. You got your worst month in there. The worst month was down 11%. Best month was up 7%. As I highlighted that down here for you. But all in all, it seems like a wash. In fact, the average return for February, unfortunately, for the S&P 500 is 0.08%. Looking back that far, February is not an exciting month, guys. Not a great way to start off of February here with the markets trying to pull back. So very much a wash whether it's going to be positive or negative. And in fact, it's only been positive 54% of the time. So it's not like it's this great exciting thing that we can focus on. Unfortunately, February is just not one of those months that gets a lot of attention. And so there you have it. There are the stats for you. We'll share that again with you maybe in the notes from Jazz email this week. Hopefully that helps you. All right, hey, let's go through the sectors here real quick. Remember the jumbled mess we talked about on Monday and Tuesday? Well, if you look through some of the sectors, we made the argument, and I'm going to back up, actually. I'm going to go over here. We're going to slide the chart. We're going to pretend today and yesterday didn't ever happen. Remember on Turnaround Tuesday, right? Gave you all the stats on that. That was cool. I got to see that. But the argument was, hey, is this a bounce that results in a really significant rally, or is this just a bounce inside of a downtrend? So remember, we pointed out this whole downtrend here. A lot of the sectors looking the same way. And we tried to make the argument, well, what's the case here? We don't know. It was too soon to tell. Well, after today, you got your news. This is, unfortunately, was a bounce in the midst of a downtrend and continues to be that way. The good news is that some of these sectors have really sold off aggressively here in the short term. Let's look at the semiconductors. Breaking through the 50-day moving average. Looks like it's headed back down to this trend line here. That won't be an immediate all-out drop, in my opinion, but down 3.5% on the day. Very, very weak. You look at energy. That was pretty weak today thanks to weak oil prices, as well as Exxon Mobil reported earnings. That stock was lower as well. We'll cover that a little bit later. But the stock, obviously, the energy, XLE, selling off in kind of a waterfall fashion here. Very weak in the short term. And so that is that one. You got the retail sector back down to the 200-day moving average. There were a lot of weak names in the retail space today. And really, there have been a lot of weak names in general in the retail space. So kind of understandable there. We held the 200-day moving average. Everybody you can see today use that as a short-term floor, if you will. But same thing. That Tuesday turnaround and bounce really was just a bounce in the middle of a downtrend. We can now officially say that. Well, technical traders will now officially say that. So the retail back down to the 200-day moving average. Transports were going to be weak today, also back to the 200-day moving average. You had weakness in UPS from earnings yesterday. That continued. That's a pretty significant drop, right? So let me zoom out here. There's UPS over the long run here, giving back like 6 months worth of gains here today, losing another 4%. Obviously very extended in the short term. That didn't help the sector at all. You also had FedEx lower on the day, just kind of following along with what's going on. FedEx doesn't have earnings or anything coming up. However, in the transports, you also have the airline stocks. So you've got United Airlines selling off today, American Airlines, all of these companies, airlines now canceling flights to China. So any of them that fly there, United, Delta, American, all of them, all lower on the day. Just a little bit of concern that that's going to eat into their bottom line if they don't get back to flying over to China soon. So we'll see what happens there. Regional banks also pulled back to the 200-day moving average. If you like some of these ideas of technical areas and you're kind of, some of you might be getting excited by what's going on here in the short term. You've got the, there you go, consumer staples, consumer discretionary higher today to start because of Amazon. Actually finished the day positive. It was the only sector that finished the day positive on the day. Amazon makes up 24% of the XLY, and of course Amazon much higher today because of earnings. They did really well there. So there you go. Let's take a look here. Normally on Fridays I like to point out the biggest movers week over week, and then I like to point out the biggest movers to the upside, biggest movers to the downside. Well, we're not going to have that this week. We're going to have at least one maybe to go on. Utility is going to be your biggest mover to the upside, but that's not a whole lot. Just a little bit of a move there. It was the biggest mover last week. Your biggest movers to the downside are basic materials, breaking through the 200-day, as we talked about there. Communication services, also bigger mover from the highs to the lows of the week. And then finally, you got healthcare. Believe it or not, healthcare was the third biggest mover from highs to lows on the week, thanks to today losing about 2%, which is good. I know some of you were looking for this to pull back here eventually. So there you go. You got it faster than you were expecting. There's a very good explanation of the bulls take the stairs. They even kind of look like stairs. And the bears take the elevators, meaning uptrends tend to go slower than downtrends. Those things can sell off real quick thanks to modern technology today. So that's what you have there. All right, if you look through the S&P 500 today, very interesting. You're going to have a handful of names that were positive. Let me just link this guy here. There we go. You're going to have a handful of names that are positive, Amazon being one of them. All right, so that was your best performer in the mix there. You've got Colgate-Palmolive. Thankfully, we own that one. That was very helpful today to own. Up about 6%. That's going to be earnings related. IBM higher on the day, 5%. We saw that gap higher coming up after hours yesterday. They're getting a new CEO. The CEO stepping down. Charter Communications, we happen to own this one as well, up 5%. And that's basically it in terms of all the excitement. Church & Dwight was higher by, well, it finished up 2%. They make Arm & Hammer and other products like that. And Clorox, I guess, was up 1% on the day. But like I said, that's pretty much it in terms of the excitement to the upside. All the excitement today is on the downside. If you have been preparing a shopping list for you active investors out there, boy, you got so much to choose from here today. Just so much. Retailers like Macy's, not that I would choose these, but just Macy's weak on the day. Corvo lost over 5%. You officially have, I'm not even going to bother wasting your time to count them. You got, what, 2 dozen, maybe 18 to 20 stocks that lost 4% or more. No, I call it 2 dozen. 2 dozen stocks lost over 4% on the day. That's how weak some of this was. Even Apple pulled back, believe it or not. Apple pulled back 8%, Visa, or 4%. Visa pulled back 4% as well. You got just a whole lot of weakness in there. Now, in the Dow today, you got Exxon Mobil and Caterpillar were the reasons why we saw extra weakness in the Dow relative to the other sectors there. Remember, when we go over here to our chart, you can see that off to your right, the Dow was down 2%. The S&P didn't lose quite as much. It was about 0.25% better there. And a lot of that's because the Dow was weaker. Caterpillar and Exxon Mobil. If you take a look at Caterpillar, a lot of people like to use this as an economic barometer. We have covered this in our portfolio updates for clients to go over how deep we actually dive into Caterpillar and their general financial well-being. I'll probably include this in our next portfolio update. I think it's next week, actually. But Caterpillar's selling off 3% through the 200-day moving average. They guided lower on earnings. Their sales overall have gone negative by 5%, and this is the first time since February of 2017, so looking weaker there. North American sales, if you dig into Caterpillar, that was the best performing area, if you can say that. Latin America, the worst performing area, continues to get really bad there in Latin America. Asia went from a decline of 4% in sales to a decline in 5% sales. So Caterpillar in general, if you're using that as an industrial way to gauge the health of the global economy, not good. This wasn't a good report from them. You also had Exxon Mobil. Oh, brother.
Hey,
here
wait.
we go. It's Friday, guys. You had Exxon Mobil in the mix there. You can now see it. There you go. Selling off to new lows. Very extended here in the short term. Down 4% on the day. The bottom line is you can read through the entire earnings and see what's happened in there. I took a few notes there. They missed on earnings. Revenues were a little bit better than expected. At the end of the day, they're producing less oil. Simple as that. They didn't put out as much oil as expected, means overall they didn't get as much as they were, as analysts were expecting. So the stock gapped lower today and sold off near lows. Now again, the price of oil was weak on the day, lost about 1%. That is testing and flirting with this support area in here. And every time it dips down there, it's finding a little buying. Even after the official close of oil today, the electronic session into the end of our stock market close saw a little bit of a bounce there as well. Okay, you got 45% of the stocks above. 45% of the stocks above their 50-day moving average. That's a 10-point drop from yesterday. That's not good, right? That's pretty weak. 33 new 52-week highs. Of the 33, you have 13 utilities on the list today. So utilities continuing to stay strong as people go towards that defensive area of the game. You got Charter Communications hitting new 52-week highs. We talked about that. You know about Amazon already. Earnings, amazing. Great job there, guys. Mondelez had earnings yesterday, and although it did hit 52-week highs today, it did close a little bit lower on the day. That's probably normal considering how far it went yesterday. You got a little short-term profit taking in there. Think of everybody that's held this stock for the last 7 months. They don't have a profit, meaning some of them have a small loss, some of them have a small gain. You get a move like that yesterday, it's going to entice some people to take a profit, especially when you see the rest of the stock market starting to kind of slow down for the day. Pepsi also hit new 52-week highs, but closed well off their highs of the day. And semiconductor Xilinx, there you go, closed down 3%. And in the semiconductor space, there's just a lot of weakness. All around a lot of weakness. I want to point out AMD. That one, although it lost 3%, seemed to have a little more relative strength throughout the day. As the market would bleed, AMD just kind of bled and then stopped. It seemed like people were picking on this one today as their favorite if they had to buy something in the overall in the market there. But all in all, general bleed lower today. And think about it. If you were investing today, what would cause you to buy something today? Right? I had a number of clients that have been waiting to put a little money in and get kind of rolling again, ask if today was the day. I said, no, why is today the day? Think about it. If the market's selling off on a Friday, why do you want to take risk into a long weekend with the coronavirus and all this stuff going on? We don't know what's going to happen by Monday. Now, if it was just tomorrow and the markets were open, no big deal. So imagine that at scale. You've got everybody out there in the market going, all right, throw in the towel, let's take some profits and call it a day, and they walked away. Pretty much what you saw. Nobody wants to take risk into the weekend there. Hey, you had 14 new 52-week lows. A lot of those are going to be in the energy space. I mentioned Exxon Mobil already. Cabot Oil, which was already a weak one, did just poke to new lows there. That's a very, very weak stock overall. Keeps showing up on our list. You got retailers in the mix as well. Kohl's, there was a couple others, but Kohl's stood out. Lost 4%, broke to new lows there. Very weak in the short term. Just nobody interested in that. And, of course, Xilinx, which I just mentioned. Just trying to highlight that one again. Okay, what else do we have here? You got earnings next week. Earnings season continues. We are not going to be done with that. Checkpoint comes out. Cisco, and not the food company. Google or Alphabet comes out. Hartford Insurance and Helmerich Payne coming out as well. NXPI if you're interested. MetLife paying out 44 cents in dividends there. And that's pretty much it. I saw a thing that Michael Bloomberg had, in 2019 spent $200 million on his campaign. This was of his own money. Spent $200 million of his own money on his presidential campaign, Democratic nominee, or trying to be Democratic nominee. How many people west of like Ohio even know who Michael Bloomberg is? Like they did a study, they did a poll, and I think it was in Washington, Oregon, that whole left side there. Did this poll, it was like 14,000 people, and they said, "Who is Michael Bloomberg?" And over half of the people responded, "Not sure, couldn't tell you." Right? $200 million, and people still don't know who you are. I mean, man, Mr. Bloomberg, if you're watching, $20 you can be on the show. I don't know if I like you or want to vote for you or whatever, but $20 we'll let you be on the show. Come hang. 2 shows, $20 for 2 shows. How about that? All right, I'll take a second here and try to answer your questions, and I apologize for the blurriness today, but I think most of you guys listen rather than watch anyways, and as long as the charts are available to see, I think you're probably happy. Tesla, you got to give it to Tesla today. A little relative strength there, right? The stock ends up closing up 1.5% on a pretty nasty day like this. What does that tell you? People looking around the market going, crap, I got to put money somewhere. That's money that was forced into the market by your fund managers there, probably reluctantly. But yeah, small little gain there. Good job. Yep. XOP, yep, it's going to be weak on the day. A lot of the oil service companies did break to lows today. That sector in general has been pretty weak. So touch extended to the downside there. And where oil's at. So I wouldn't say it's a buy here. If you happen to own it, I wouldn't be doing anything with it. To me, I think if I was an analyst, I would just say, it's a hold, right? Hasn't done anything extreme one way or the other to get you making major decisions, I think. Yep. There you go. Where's Tandra, man? Come on. Little Tandra took the day off. I know you guys have been watching the comments. Tandra's been just patiently waiting for this market to fall. You got it today. Kramer says oil is dying and to stay away. They say that every time oil falls. In fact, Kramer has said that numerous times when oil has been in a downtrend. At the end of the day, oil is a very much, it's a trending technical commodity. So when this thing starts an uptrend, it consistently stays in an uptrend, right? When it has a downtrend, you'll see it go, 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 go before it turns, right? So very much so. This is in a trend right now. Until it starts to turn, you won't see people taking a shot. But every time oil, even back like 4 years ago, oil was on this nasty downturn. Even at that point, people were saying oil's over, it's done, we don't need it. Think about it. Oil is in basically everything we use. While it may not be used for automobiles as much anymore, and you saw the new Hummer and everything, right? Can't wait for that Super Bowl commercial. All-electric Hummer coming out. They're going to announce that on a Super Bowl from GM. We still need oil. Maybe not as much, but we still need oil. Yeah. I just think it's funny. Every time oil falls, that's the argument they make. We don't need it as much anymore. Yeah, we do. Disney stock higher today. What do you think? Disney, good relative strength stock on the day. I'll give you that too. Yep, there's a handful of them, and they're easy to spot today because when the market basically bleeds off everything, go sort a list and see what the stocks were higher on the day. There's a little hint at your relative strength there from Disney. Looks good. Yep. I would like, same thing. If I owned it, I wouldn't do anything. We do own it, but I wouldn't do anything with it. I don't think the pullback's been anything to be scared of. I don't think the company's doing anything to be scared of. It's just normal volatility of that stock. Yep. Any thoughts on IULs, individual? You notice I don't do videos on those because they are suitable for the individual. And I don't mean every individual. I mean each individual needs to take a look at it and see if it's suitable for them. They market those suckers as if they're good for everybody. That is most certainly not the case. Yep. Marathon Petroleum, remember Marathon Petroleum is up, well, it's up today, you're right. But remember they're selling off or trying to sell off Speedway. They own Speedway, value it somewhere in the $14 to $18 billion range. And it looks like that's going to be successful as far as finding buyers if they haven't already. The news today may have been that they found a buyer, but I know that's what they've been working on. And so there you go, a little bit of strength there, trying to shore up some things over at Marathon. Yep. Yeah, that's true. Why would Bloomberg give me 20 bucks? Everybody probably knows who he is here. All right, 10 bucks. 10 bucks, Bloomberg, you can be on the show. Help us buy a new camera. I like it. You think it's the start of a 10% pullback? I hope it is. I mean, I think today went a long way to get, because think about what happens going forward here. You got Monday coming up. Is everybody going to just dive in and buy this thing after seeing today? You never, ever see that. I mean, you could call that a bottom. If on Monday we reverse the entire thing, official bottom in the market, new rally starts from there. All shorts need to go away. I mean, it's just not going to happen. So what happens on Monday and a couple days after, you have people digesting what's going on here. And you've also wetted the beak a little bit of the shorts because now when they see a bounce, they're going to assume, wow, we have just found a top here. And so there's going to be more short pressure on the way up. Also, add to that, any little bounce, and you're going to have people that recently bought or are nervous about a market pullback, they're going to take that opportunity to close positions at a slightly higher price. So you put in a bit of a day today that's probably going to, this high that you see right here is probably going to be something that we don't look back at for a while, in my opinion. Now, how much we fall, who knows, right? There's so much going on right now. I love it. How do you treat your own personal stocks at this time? So I invest just like you guys. I'm right there with you with our funds on our website and everything. And so this is a 2% drop in the grand scheme of the massive year we had last year. Basically, everybody had a great year last year. So a 2% pullback is just a reason to say, come on, give me a little bit more. I want to invest a little more, right? Come on, pull back. Not a reason, in my opinion, or nor would I be out there just like panicking and selling everything at this point. I would like it to pull back, just like I think everybody that watches this show. Could you make a video on black swan events? I could probably do better than that. We've done a handful of studies on those, the effects of your all kinds of things, buying power reduction, exposure, recoveries, and all those sort of things. I could probably dig those up. Yep, considering there hasn't been one since that the May 10th, the flash crash, May 10th, that data would still be good. Yeah. There's my discount people out there. We'll see. Well, I hope Monday brings more pullback for all of you that are looking for that. And in the meantime, I'll wrap it up. It's kind of funny because it's like a rainy, dark day here, and it just all seems to be like a little bit unnerving. But I hope you enjoy it, and thanks for stopping by here today, watching the show. I got to shout out to Victor real quick. Victor was my man that sent this money. I believe I said Sergio, and old Victor slapped me over the head and said, buddy, I sent you the money for the wall of dough. Victor, thank you so much. I do apologize for saying Sergio or whoever I said. You can't see it down here, but there's a whole list of everybody, and when I look down, sometimes I just spit out whatever I see. That's the downside of doing a live video, but I appreciate you guys watching. Thanks, Victor, for sending the money in there. We'll get it up on the wall, and you guys enjoy your weekend. We'll see you again on Monday, and talk to you then. Enjoy the Super Bowl if you happen to be hanging out, having a party or whatever. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.